the Fed has been very lucky for the last couple of years, and suddenly their luck has turned dramatically against them. They were ready to cut, and then inflation comes in on the high side, and they go, whoa, wait a minute. Then they have a July FOMC meeting before they see the jobs report, and jobs report comes in very weak. And so now, in hindsight, they probably wish they had cut at the July meeting. But going into that meeting, given the forecast for payrolls, nope, not going to do it. I think they have to start talking. It's very hard in August because most of these guys are out on vacation. I think earlier it mentioned that the board seems to be all out on vacation. But they need to start talking. They need to signal that September's definitely happening.
Dr. Harris, I was reading your note from earlier this week titled "Slow and Steady Wins the Race." And I mentioned earlier, I'm a big Guns N' Roses fan. I love the song Patience, but you have Neil Dutta talking about 50 basis points in September, and you're saying the Fed's behind the curve here. Is there a chance that the markets start pricing that in more confidently?
Well, they have. By the way, Neil and I worked together for quite a while. He's a good friend of mine. And I think this is a good, healthy debate. I think I was wrong. I think this jobs number to me was a bit of it kind of hit me pretty hard. It's looking on like things are weakening faster than you'd like to see. And it's the payroll number that I'm most worried about. It's just, this is starting to look shaky. Would they go 50? Well, the market's now pricing in about a 70% chance of a 50 basis point move at the September meeting. That's a really high probability. Yeah. You really have to believe the economy's heading into a recession to get the kind of cuts that are priced into the market now. Now, I think the risk of recession's rising, and that slow but steady story's is losing its validity. But to go 50 in September, we're going to have to see an even worse jobs report and continued soft inflation readings. So I think the market's overreacted. It's pricing in a Fed going at every meeting, including this 50 basis point kickoff cut. It's just the bond market overreacts, and today I think it's an overreaction.